How to open an Etrade account and buy stocks. Making an investment in the stocks market is hard, truly hard. There's nothing more painful in the world than investing in a share that turns out to be overpriced. The same happens every time the share starts to drop, then it starts to decrease, then it drops out of the sky, and there is certainly almost nothing that you can do about it. Infrequently a share will drop such a lot that it may take a long time to climb back to the level at which you purchased it. No one wants to be caught in an eventuality where their share price is underwater, and there is certainly nothing they are able to do about it. Maybe this guide is going to give you some suggestions so you never find yourself in this actual situation. So how do you decide or recognize if a stock is overvalued? There are a few methods to try this, and all of them consist of research on your own part well before trading. Certainly one of the absolute best methods to resolve whether a stock is expensive is to take a look at the price-sales proportion, or PSR as it is frequently referred to. The PSR is the price per share divided by the sales per share. In the event that this number is bigger than 75, then the stock is far too pricey. This suggests essentially that financiers are paying a premium on the future enlargement of the company. If that is the case, then the share price hasn't got anywhere to go but lower in the majority of situations. Another really excellent indicator the stock may be overpriced is insider selling. In the event that management does not need to have stocks in the company's stock, this is a great sign to tell you to stay away. You are able to see what company insiders do as far as selling and purchasing stock by checking with the SEC and looking up the corporation at the SEC's internet site. It does not cost any money to try this, it just takes a bit of time to study the reports. If you abhor doing that type of analysis on your own, there are newsletters you can sign up to, newsletters that keep an eye on shares and monitor insider selling of the stocks. Several of these newsletters are fairly costly, but if you do lots of trading and you have an important investment account, the price could be totally worth it with time saving on your side. Ultimately, glance at the book price of the investment. High PSR stocks more often than not also have higher price-to-book values. A book value is often just the firm's assets without all of their liabilities. Whenever a firm is selling at less than book price, then probabilities are it's undervalued and the share price might increase over a time period. On the other hand, if a share is selling at the higher than book worth, then the capability for future growth could already be allowed for in the expensive shares of the stock. Anyhow you do it, ensure you've got a recognizable methodology when it comes to valuing companies to build whether they are well priced or not. A touch of extra effort before you get a share can pay in spades in the longer term.